What's going on, people? It's Kevin Woods with Real Utah Living. Obviously, Kevin does real estate. I'm a real estate agent with Coldwell Banker up in South Ogden. Welcome to my channel. What's going on, everybody? Have Garrett Hansen here with Academy Mortgage. He's going to do some rapid fire questions, Q&A. So I'm going to give him some questions. I think we have about 11, and he's going to give his answer in 30 seconds. So,
all right.
You ready?
I think so.
All
30
right.
seconds or less.
30 seconds or less.
That's my goal.
All right. First question. What trends are you seeing as far as the type of loans people are applying for? And do you help steer them in the direction of which loan is right for them?
Oh, great question. Depending on the borrower, their qualifications, their credit score, down payment, debt to income ratios. There's over 200 different loan programs that we work with here at Academy, and so it's really just going over their goals, but getting their full financial picture and making sure we're not overlooking any opportunities for them. So. Really depends. It really depends which program is going to be best suited for each individual and situation. But we'll always eliminate it down to the best options that will best suit their goals and get them to where they want to be.
Cool. Are there any loans that may be beneficial for someone who may who doesn't have great credit?
Yes. So. Great credit, I'd say, is above a 700, somewhere right around there. Below that, there's plenty of great options. Even no down loans down to a 620. Utah Housing has a loan with that, not even a down payment required. Then even down to a 580, you can still get into a mortgage. So there's plenty of options. Don't let that be a deterrent from applying for a mortgage. Is your credit score.
All right. So I guess with the typical loan scores for the popular loans like the conventional VA, USDA, and FHA, do you have any variances for somebody who doesn't have great credit to help them, whether it be proof of funds, or do you have something to help them if they don't quite hit that number when you were talking about the FICO credit score?
Yeah. So there are programs like that. Usually a substantial down payment is required to compensate, for either low credit or the other issues that often run into is bankruptcies recently, or foreclosures or short sales. And so there are some great programs, that go in hand if you have a down payment that you could still qualify for, even with those either lower credit scores or bankruptcies recently, or foreclosure, or short sales or foreclosure, stuff like that. So there's some good options out there as well to explore.
Cool. Do you see any changes as far as mortgages go based off the current market trends?
So back with the beginning of the pandemic, we saw a big tightening on credit qualifiers. Credit scores, minimum required credit scores went way up. Those have come back down. They're coming back down. We're getting to the point where it feels like pre-pandemic, which is great. There are still a few programs that were there, back in early 2020 that aren't back yet. So hopefully we'll see some of those programs like adjustable rate mortgages are something that haven't really come back as strong yet. So among other things, but yeah, things are looking better as we keep going in the right direction on this pandemic.
Cool. Can you break down the steps? This is probably important for people who are looking to purchase or haven't purchased in a while. But can you break down the steps in getting qualified for a home loan and then everything in between closing?
Yeah. So first thing when you start the process to get pre-qualified, that's where we go through, we see your qualifiers and line up the best loan programs. And assuming everything in there looks good, we document or we verify your income, your assets, all of the info in your application. And if everything checks out, we get you pre-approved. And that's when you get out shopping for your next place with Kevin here. And once he gets you helps you get under contract, find the right place, you get under contract. Then we get the contract and we start going on the loan. Where we get the appraisal ordered, we get it processed, we do all of our due diligence on your file to make sure everything is as it should be. So we'll usually get some extra documents from you potentially. Pay stubs might be outdated by that point or something like that. But we'll coordinate with all the parties. We'll get the title insurance ordered, help you get your home insurance in place, and get your file underwritten. And once it has the full underwrite and is cleared to close, everything looks solid on it, we'll get the closing documents over to the title company. At that point, they'll schedule with you to go sign them all. And then once that's done, we fund the loan and you guys get the keys. So that's really as basic as it can kind of get from start to finish.
Cool. So does Academy have any special promos or options as far as loans go?
Academy, we have some really good unique programs. We have a first-time home buyer, 100% financed, no down payment required loan. Excellent program. We also have a program for investment, 1 to 4 unit investment properties, with a lot lower down payment requirement, and no mortgage insurance as well. So between those two programs, those are pretty unique. So I'll just leave it with those two.
Cool. So we have some questions from when I asked on social media. One of the questions is, what all comes out of pocket as a buyer during the process? And is it different based on the type of loan?
Say that one more time.
What can a buyer expect to come out of pocket with?
Oh, out of pocket.
Yep.
So the closing costs and the down payment is a usual requirement. So, down payment, if it's a 0 down loan, you don't need it, obviously. But depending on the loan program, it's a 0, 3, 3.5, 5, up to 20, 30, however much you'd want to put down. Outside of that, you have the closing costs. And the closing costs involve the lender fees, title fees, the appraisal cost, the escrows, when we set up a new escrow account for you, and then your prepaids, which you pay a year in advance of home insurance premiums and then interest through the rest of the month from the day you close. So overall, I would estimate it's usually somewhere between 2 and 3% of the loan amount to expect for closing costs.
And is that with conventional? What about VA or USDA?
That 2% rule is, kind of across the board, I would say. It's a good marker. So
cool. With VA, I know we talked about it, but you may mention it as something that could help a potential buyer is if they have something that needs to pay off, they can work with the seller and try to get the seller on board about closing or paying off a specific thing in order to make the deal go through. Do you have any?
For the VA?
Yeah, for the VA.
So VA is a pretty unique loan where you could actually have the seller pay some of your debt off to qualify if needed. So it's the only program I'm aware of that can do that. But to benefit our veterans and help them, just one more step to help them get into a place.
Cool. And then the USDA, you mentioned a really cool fact about the USDA about appraisal and using what's left toward closing costs.
Yeah, so USDA is the only loan that I'm aware of that allows this as well. Because normally you need to bring the closing costs out of pocket or have the seller pay them. But if, let's say you're buying a house for $300,000 and it appraises for, let me back up. So let's say you're just buying a house and it appraises for $5,000 over what you're purchasing it for. we could actually wrap the, use that $5,000 extra equity to cover closing costs if you needed it. So that's a awesome USDA benefit on that loan. Cool. And I didn't talk about the other expected costs with VA and FHA and USDA. So each of these programs, VA has a funding fee, USDA has a guarantee fee, and FHA has an upfront mortgage insurance premium. And they're all upfront fees that can be wrapped into the loan, so it wouldn't be out of pocket, but it's still a cost. And those vary depending on different situations, but so that's a cost we talk through and just let you know about with those programs.
Cool. Do you have a credit building program if you can't qualify a buyer? I know we spoke on this, but
so I'm not a credit repair specialist by any means, but we if someone doesn't qualify and say their score is a little low, we have access to we order our credit reports through a credit company called Credit Plus. They're a third party, and they have a really neat analyzer, and so we can go through and say, okay, this is all the balances you have. What if you paid this card down or open up a new account? So many different ways we can tweak it and see what kind of movement would change things on your report immediately or in 3 months or 6 months down the road. And so happy to, we'll always go through that. Last thing I want to do is just tell you your score is too low, come back in a year. So, and then there's also some, actual specialists, credit repair specialists that we could, get you connected with if you'd like to explore that too.
Cool. All right, last two. How does funding for multiple properties work?
So if you're purchasing a property at the same, let's say 2 or 3 at the same time, the main things that qualify you again is your credit score, the down payment, and the debt to income ratios. So with purchasing multiple properties, the biggest thing we're going to look at is making sure you have the down payment for them and to cover all the closing costs needed. And then on top of that, your debt to income ratio. So we just need to calculate, make sure we have all of the payments documented. So that you're seeing the full financial picture as if you purchased all of the properties at the same time. And so the best way to do that is we just underwrite them all right together and close them right near next to each other as well, just so that we have it all documented. Your full picture is correct on packaging all of these loans. So very doable.
All right, so last one, and this is really popular in Utah because we have so much open space, and unfortunately our farming businesses are going away, right? So they're selling a lot of land. So the last question is, can you buy land and then later on apply for a loan for a new construction home? And then if so, what would be the stipulations?
So if you bought a parcel of land, you would have to start building on it basically immediately to use a construction loan. If you're just to buy a piece of land, you'd need a land loan or a lot loan if it was a designated lot, a developed lot. And then once you're ready to build, you'd have to convert and get a construction loan. And that construction loan would usually just pay off that lot loan and wrap it into one loan. So if you're buying land and then building on it at a later date, the only stipulation is really you'd have to get 2 loans. So you'd have the lot loan or the land loan and then the construction loan versus just one loan if you did it all at the same time. So you just have a little bit more in closing costs between the 2 loans.
Cool. So
and you'd wait to get your house, But if it's it's a great option because if that's where you want to be, if that's the place you want to be, but you're not ready to build on it, get the lot loan or land loan and secure it.
There you go. So that was all the questions I have. I'm gonna open it up for you. Talk about Academy, talk about what you guys offer, the extent where you guys can service, pretty much anything that you have.
Okay. So work with Academy Mortgage. We're in Utah. We're the top purchase lender. We're a direct lender, so we actually fund all of our own loans. Some things that set us apart is our operations. So everything is in the branch from start to finish, from loan application to closing. We got all of our staff here in each branch, which is really allows us to rock and roll when it comes to loans, and if there's issues involved with it, to easily resolve them, get quick answers. And so just to deliver that top-notch service that we aim for. Something also is the pre-approval when in this competitive market, and just having the top purchase lender, and then also our pre-approval, which is unique. It lists a lot more of the information that the seller is going to want to know to help get your offer to the top of the stack, and will ultimately help you win more offers. We work with over 200 different loan programs, so we got your back on whatever situation you need for your goals. We got your back. So,
all right, man.
Love to answer any further questions anybody has. But yeah, appreciate you.
Appreciate you allowing us to do this. We'll do this. I'm pretty sure we'll have another list of questions to go through probably in about a month, and as things start to shift. So if you guys have any questions, I'll put his information in the video so you guys can contact him. If you're looking for a house or looking to sell, you always can reach out to me. But yeah, thanks. Appreciate you guys.